There are 10 common tax myths that could cost you when it comes time to filing and paying your taxes. Number one, I hear this all the time, cash income isn't taxable. That's not true at all. Many people who get paid in cash do not report that cash and pay taxes on it, but that's not true at all. Number two, if I don't get a 1099, I don't have to report the income. Sort of a corollary to the first one that I shared with you, because people who are not getting a 1099 don't think that they have to put it on their Schedule C because no one will know about it. The IRS will never find out. I've had many cases over the years where the 1099s were issued years late and it came back to bite the taxpayer. Number three, gifts are deductible. I don't really know where this one comes from, but a lot of times people think if they give a gift to their son, daughter, brother, sister, grandparents, whatever, that they can deduct that gift from their taxes. No, they're getting that confused with charitable contributions. It's not a charitable contribution to give a gift to a relative or a friend. Number four, home office deductions are a red flag and guarantee an audit. I don't think this is true at all. Home office deductions, if carried out correctly, are not a red flag. There's even a safe harbor for home office deductions, so that's not true either. Number five, filing an extension delays when I have to pay. Nope, not true. It delays when you have to file. So when you get an extension, you don't have to file until October, but you were supposed to have paid the tax by April 15th or whatever extended deadline if it falls on a weekend, for example. Number six, if I can't pay, I shouldn't file. No, that's not true either, because here's the biggest reason. If you don't file, the statute of limitations for collection and bankruptcy and some other things never start to run. So you should not delay filing. You should go ahead and file even if you can't afford to pay. There are programs if you can't afford to pay. Number seven, the IRS can't collect after 7 years. I don't know where this came from. Years and years ago, decades ago, the statute of limitations for collections was 6 years. It's now 10 years. So 7 years, I'm not really sure where that came from. Number eight, student loan forgiveness is always taxable. That's not true either. I'm not really sure why that is the case, especially with these new programs, at least during the Biden administration, that rolled out with student loan forgiveness. But other types of loan forgiveness or debt forgiveness can often be taxable. A forgiver of the loan will issue you a 1099-C, and then you have to deal with that. Audit notices only come by certified mail. Not necessarily. In fact, the first audit notice that one typically gets is called a CP 2000. It doesn't come by certified mail at all. And many normal, typical come down to the office with all of your paperwork audit notices don't come certified mail either. And lastly, married couples must file jointly. Now, this is a misnomer because every year, except for in community property states, if you live in a community property state, this does not necessarily apply to you. It gets much more complicated. But in non-community property states, which is the vast majority of states in the United States, married couples every year can make an election to file either jointly, which typically reduces the tax liability, or they can file separately, which increases the tax liability typically, but not always, but also separates liabilities. So he pays his taxes, she pays her taxes, or for the same sex, or hers, whatever. Those are the top 10 tax myths that could cost you when it comes time to filing and paying your taxes. Thanks for watching.